Welcome to The Explainer. Today, we're going to demystify the stock market. We're working from a simple idea that this stuff belongs to everyone, not just a handful of experts. So, if you've ever stared at a stock chart and felt like you were trying to read a foreign language, well, you're in the right place.
So let's just start with a feeling I think we've all had. That wave of intimidation when you see all the financial news, all those complicated charts. The source material we're looking at today makes a really bold claim. That feeling, it's not your fault. It's actually part of the design, and we're going to show you how to flip that script. All right, section 1. So why does all this finance stuff feel like some impossible puzzle? Well, the argument here is that all that complexity, it isn't an accident. It's a feature. Yeah, according to our source, this isn't just in your head. It's actually a business model. See, financial institutions can profit from your confusion. All the crazy jargon, the overwhelming charts, it's all built to make you feel like you can't do it. So you'll just hand over your hard-earned money and let them manage it for you. Think about it like this. You go to a car salesperson, they ask about your budget, what you need the car for. You go to a financial advisor, they ask about your time horizon and your risk tolerance. Now, the words are different, sure, but the source argues the game is pretty much the same. Sell you a product, earn a commission. And that leads to a really, really important question about the whole traditional setup. In a system where you're the one taking all the risk, who is it that always, no matter what, gets a paycheck? And here it is, the big reveal. When you invest through a lot of these old school institutions, you take on all the risk. All of it. If the market goes up, they take a fee. If the market tanks and you lose a bunch of money, they still take a fee. It's a system where, just like in Vegas, the house always wins.
But hey, once you see how that game is played, you can decide not to play it that way, and this is where things really start to shift. The truth is, you already have exactly what you need to take control of your own financial future.
I want this one to really sink in because it's the most important message we've got today. You are not an idiot. You are not a dummy. You are absolutely smart enough, capable enough, and creative enough to get this. So forget all those books called Investing for Dummies. You're way more qualified than that. You know, success in trading isn't about having a PhD in math or some secret code. Our source says it really just boils down to two things. Just two. First, managing your risk. And second, controlling your emotions. If you can master those two, you're ahead of the game. And this quote just perfectly captures that second key. Hope is not a strategy, right? The market is just numbers. It's just data. It moves based on buying and selling, not on what you really, really wish would happen. Learning to check your fear, your greed, and your ego at the door, that's your first real step to making clear, smart decisions. Okay, so let's get our hands dirty and build some real skills. We're going to start with the absolute basics, how to read a stock chart. This is the language of the market, and I promise it is way simpler than it looks. Now, you've probably seen those crazy line graphs that look like a heart monitor going haywire. We're going to focus on something way more useful, Japanese candlesticks. Each one of these little candles tells you a whole story about what a stock's price did over a certain amount of time, whether that was a minute, a day, or even a whole week. Okay, here's the simplest way to think about it. Every single candle represents a battle. You've got the buyers who are trying to push the price up and the sellers who are trying to push it down. If the candle is green, it means the buyers won that battle. Traders call that bullish. If the candle's red, the sellers won. That's bearish. That's it. Green means buyers are in control. Red means sellers are.
Now, let's look at what happens when you get a bunch of candles together. You'll often see a stock's price go up and then hit this invisible barrier. It just can't seem to go any higher. Traders call this resistance. Just think of it like a ceiling. The price keeps bumping its head against it. But, and this is where it gets really cool, once the price finally gets enough power to smash through that ceiling, that old resistance level does this amazing thing. It transforms. It becomes a new floor. We call it a support level. So in the future, the price might fall, but it'll bounce off that new floor. The old ceiling has become the new floor.
All right, so we've got our map, the candlesticks, the ceilings, the floors. Now we need some road signs to help us figure out which way to go. In trading, these are called indicators, and they just help us make sense of what we're seeing. Okay, I know, that name is a mouthful. Moving average convergence divergence. Don't let it scare you. It's one of the most popular tools out there, and you absolutely do not need to know the math behind it. All you have to do is learn to spot one simple visual signal.
And this is it. This is the whole takeaway. You don't have to be a math whiz to use this thing. Your job isn't to calculate the MACD. Your job is just to watch for the moment its two lines cross over each other. That's it. That's the signal. So the MACD has two lines. Think of them as a fast line and a slow line. It's how they interact that gives us the clue. When that faster line crosses above the slower line, that's what we call a bullish crossover. It's a hint that momentum is building to the upside. Now, when the fast line crosses below the slow one, that's bearish. It suggests downward momentum is picking up. That crossover, that's what you're watching for. Okay, we've learned how to read the map and how to spot momentum signals. But this last section, this is about what our source calls the single most important tool any trader can have. It's the one thing that protects your money and keeps your emotions from running the show. And that tool is the stop loss. Think of this as your eject button, your non-negotiable safety net. This is how you manage risk, which, remember, was one of the 2 keys to success. It's your ultimate defense against a bad trade turning into a total disaster. So what is it really? A stop loss is just an automatic order you set up with your broker. You tell it, hey, if this stock drops to this specific price, sell it for me. No questions asked. You decide, before you're in the heat of the moment, exactly how much you're willing to lose. It's your pre-planned exit. See, by setting a stop loss, you replace hoping with a concrete plan. You define your risk before you even enter the trade, you set the order, and you let the computer do its job. This is what keeps a small, acceptable loss from turning into a catastrophic one. It keeps you in the game, so you can trade another day. So there you have it. We've gone from seeing how the system is kind of built to confuse you, to decoding the charts, and finally to using the one tool that puts you back in the driver's seat. The path is all laid out, and our source makes one thing crystal clear. Taking control of your financial future doesn't start with being a genius. It starts with just making the decision to learn and having the courage to take that first step.